Good evening, traders. It is Monday, June 12th, and July 12th, I'm sorry, 2010. And I'm going to go over the market action today. It was a light volume day. We closed pretty much flat for the day. Take a look at some of the charts I was looking at yesterday. And first chart I'm gonna look at is the daily VIX chart, and you notice we had a falling wedge back here. I actually got short right near the bottom here, which was around the 113 area on the SPY, and I caught the move. I took out pretty close to the bottom and went long. Caught some of this downward VIX move, but I got short a little too early. But now you have the falling wedge, and I'm anticipating that the area is going to hold here, that we're not going to make a new low, and looks like we could have potential positive divergence on the MACD. Stochastic is 1321 reading. If you look at the hourly VIX, here you can see. Well, actually, I'm going to look at the other the other hourly. Hold on a second here. Okay. In the Baltic Dry Index, I was down down from 4,300 in May. It's already at it's at 1840. I know they're blaming it on ships coming online, but I think it's saying that we're in for some more deflation and a weak economy. And I'm trying to find this VIX chart here. Okay, yes, this is the VIX hourly, and you can see the falling wedges, and you can see that we have an MACD cross. The histogram has been ticking up for a while. It's now above the zero, and the stochastic looks like it's having a breakout too. It came down here, came down over here, and popped up, and it looks like it's ready to go up. You got the MACD is already. You already have a crossover, so you could have a lot of upside here. You had putting in a higher low here, and looks like this pattern could play out, and we could make a run for the 37 area, and that would that would probably break, and the market would make new lows in that scenario. Another chart to look at is the dollar. So I like the dollar. The histogram was ticking up. You have another positive bar today. Stochastic is still very oversold. You got 13 and 8 reading. It is embedded, so you have to be careful. But you put in a nice up day today, closing at 84.24, up 30 cents on the index. Next chart to look at is the SPY hourly, and it was just a churn fest today. He closed up 7 cents. Then you had some earnings reports after the bell that were being bought, but right now, as of this video at 10:30, Asian markets are drifting down a little bit, and the futures are up about 1.5 points. But they're probably up a little more than that, because that's not calculating a fair value. Yeah, and you have the stochastic's been overbought for the last few days. You do have the MACD bearish cross though, and the histogram has been ticking down for a while. It's actually below the zero. You had the 18 cross to 100 period today, which is bullish, but the volume was very light at 131 million shares. As you can see here, this is the SPX. We're going to be hitting some key resistance areas in the 1085 to 1090 area. The 45-day is 1089.57, and the downtrend line is about 1085. So I would think that area should probably hold. Excuse me, I got a little cold here. You got the MACD. You got a bull cross, but you're still below the zero line. What I'm anticipating is that the histogram is going to put in a lower high here and start coming back down again, and maybe the stochastic does not make it all the way up to overbought status. The weak volume is a bad sign if you're bullish. We haven't really had any pullback, and this kind of action usually into the downside. As you see here too, on a 15-minute, we had the rising wedge. We fell out of it, but there was just no follow through to the downside, and then we just kind of churned around. And then the shorts come in, and the short covering comes in at the end of the day, and we close near the highs, and the bulls may try to gap it up tomorrow, or it may go up overnight and touch the 1085, 1090 area, and maybe pull back by the time the market opens. I'm thinking that tomorrow we should get some downside. Got a lot of negative divergence here piling up since the rally really took off from the 106 area. You put in the rising wedge. You broke out of it, and basically it's just been a weak grind holding pattern. So looking for this for the market to come in. You got a lot of stocks that are showing some weakness, like Apple. Excuse me, Baidu. Some leaders are showing signs that they may be cracking. If that happens, then that should be a definite signal that we're going to be heading lower. Let's see what else I wanted to go over here. Look at the UUP hourly, and the MACD has crossed the 0 line, and the histogram ticked down a little bit. Now it's flattening. What I'm looking for is this MACD to rise above this level here, signaling, also matching the positive divergence here on the MACD, which would confirm a rise above this 25 or up to that 2510 area. That would be a pretty big move, and that would probably coincide with the big market sell-off. So that would be good news for the bears. All right, that's all I'm going to talk about tonight. I'm a little under the weather. Not too much happened today. As you see here, I'm looking at the Asian markets. We got China down 1.5% right now, and that should push the Chinese market back below the 18-day moving average. So you want to see how these foreign markets behave in here. I don't really, I don't really see a lot of strength in the market. I think it's just a short covering rally, and it's very tough to catch the exact top of these things. But when the bottom falls out, it can happen very fast. So got to be careful. You got to respect the bulls here, but the volume has been very light, and really you got the MACD crossover on the VIX, and as you're going up, volume keeps declining. And here's a look at the Chinese market. It looks like the 18-day is 24.79, and right now we're trading at 24.54. So that's a good sign here. As you see, it looks like there was a lot of resistance at that 2500 area. So it came up to that level, and it's coming back down. It's not good for the Chinese market. And if Chinese market goes down, also that's usually a sign that the commodity markets are weak too, to demand for commodities, and that's been the case. As actually, I wanted to look at some commodity charts. Some of the stocks that I was bullish on that did really well in the rally, in the short rally, had some interesting days today. Like X here, as you see, this downtrend line came up and touched it on Friday, and sold off pretty hard today. $1.37, down 3.19%. But the key thing is it sold off back below the 18-day moving average and had a hard time crossing that resistance. So it looks like this stock could head back down to new lows soon too. And it was SCCO, Southern Copper. Same thing. It was coming up to a resistance area, and you had a big decline today of 3.96%, $1.20. And the MACD is curling over below the 0 line, and stochastic is curling over too. Still pointing up, but it bent a little bit. This market comes in hard in the next couple days. We could be in for the next leg down in the market. And gold was also weak. Silver was on the weak side. I'm not sure how these markets are going to react. Gold might get a bid once you start going down again because of the currency fears, stuff like that, and silver should get a bid along with that. All right, well, have a good day. I'm going to stop it here.